So this provides exposure to the largest Chinese companies listed on the Hong Kong Stock Exchange, and it offers Australian investors a way to invest in China's economic growth as well.
So that one's actually returned 54% in 2024. Crazy.
So this is when we talk about diversification as well. Sometimes people are interested in different companies, different economies, different countries, and this is a way to invest in China.
The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us. Welcome back. Today's episode is talking about the top performing ETFs of 2024. Yes, it's 2025, but it is important to kind of look back and see what performs well, what doesn't. We often get asked, why wouldn't I invest in such and such share? It has the highest performance over the last year. And obviously I want to take advantage of that. So we are actually going to run through some of these ETFs and why we wouldn't invest in them, even if they are top performing.
Yes, I've actually got one of these on the list, but we'll get into that soon. Money wins, money losses. What's yours for today?
I actually bought a $35 cake from Costco for my birthday, and it was such a win. It's like a huge cake, $35. I cannot get that at the local baker for that. And it was okay. It was good enough. It was a good cake. It fed everyone. I have like still half a cake left.
Oh, fun.
And it sparked the conversation of how awesome Costco is. There was a lot of people who were asking all these questions. I was like, yes, all the platters are from Costco. Yes, all of this is from Costco.
Yeah.
And everyone was blown away with the level of food and how cheap it was holistically. And I think I got a bunch of Costco converts.
Oh, amazing. Do you think Costco actually saves you money though?
Yes, I do for my house.
Okay. Yeah, because I find it fun and exciting and I enjoy the platters, but it's always things I wouldn't have bought anyway. Like I get distracted by the fun stuff.
Yes. And that's the big thing. If you're new to Costco, you can easily get distracted. Like, oh, I'm going to buy this $10 thing of cranberries. Like, do you actually need that? Probably not.
No.
But if you have an idea of exactly what you need, so we get like a lot of our canned tomatoes and stuff, our quinoa, our pasta. And if we know we're going to have those things for dinner, it makes it more economical. In fact, I've seen way more people go to Costco. Like it has never been this busy as it's been over the last year. And I think that's because of the cost of living.
Yeah, crazy. Because the last time I went to Costco, I bought a vacuum cleaner.
Oh, wow.
Yeah.
Did you?
Yes.
Yeah.
It was a while ago now.
Did you save money? Was it worth it?
Well, I probably didn't need a vacuum cleaner that was that fancy, but I was like, oh my gosh, it's like a pink shark one back then.
Oh.
Yeah. So I don't know if I saved money because I probably could have gotten a cheaper version elsewhere, but I was like, oh, this is so exciting and there's all these good deals. And I went with someone. So I was like, I have to get it because I won't be able to come back because I didn't have my own membership.
And did you know that Costco actually has like some of the cheapest hot dogs? My partner was telling me this. I didn't know this. But
Cheaper than IKEA.
They didn't want to raise the prices when it happened, like with inflation, and they had like apparently a new board. And the one thing there was like, do not raise the price of Costco hot dogs.
How much are they?
I think they're $1.90.
Oh, because I think, isn't IKEA still $1.50?
Oh, I don't know. Yeah, my partner was telling me they actually found fulfillers locally to make the hot dogs to keep the prices low.
So good. And IKEA has gone up to $2. They used to be $1.
There you go.
Inflation.
Yeah, Costco's $1.99.
Wow, it is just cheaper by a cent.
Just a little bit cheaper. There you go. I'm curious as to if other people are Costco fans the way that I am. What's your money loss or win?
Loss. I got an Uber home from the airport late last night. My plane was delayed. We got in at like 2 a.m.
Oh, brutal.
Yeah, and it was $120 something.
Whoa.
Crazy. And I got an Uber to the airport when I left for like $65. So it was like double, which is crazy. And then they also started the timer thing before they were actually at the pickup spots, and I got charged a waiting fee. And I found they've been doing this more and more often recently where like it'll be like your driver's arrived and they're not actually there.
So this is Uber. Did you also check the other apps to see what was cheapest?
I actually ended up getting a DD, not an Uber. Sorry, Uber. I'm hating on Uber. No, it was a DD, but Uber was like the same. It was like $5 more expensive.
What if you took a taxi? What would the price be?
I don't know.
Because I found recently that I will take an Uber to the airport and take a taxi back, and sometimes the taxi is cheaper.
Really? Because I've had really bad experiences with taxis where like one from the airport to just the city, not even to where I live, was still $90.
Yeah, it's so hard. I wish you could see them all, the pricing at the same time, and then someone make an app quick.
Yeah, and I don't like when my Uber is more expensive than the flight. So not as fun, but that's okay.
Yeah, brutal.
Oh, well. Yay, Melbourne. It's also like a bit of a safety thing too, because I didn't want to get the Sky Bus that late by myself as well. And then I would have had to get an Uber from the train station anyway.
Yeah. And that's the problem with depending on where you live in the city, if you have to take the Sky Bus in. And also, how is Melbourne the only airport without a train into the city? Let's not even get me, get me started with that one.
Well, more fun topic. Our top 10, not even our top 10, sorry, the top 10 best performing ETFs of 2024.
Yeah, we got this list off Perler. But the important thing that we want to just talk about is recency bias. So if you don't know what this is, recency bias is essentially in investing when investors place too much weight on recent events or trends, assuming they will continue indefinitely. So the bias can lead to chasing high-performing shares or ETFs based on their recent gains, or panic selling after market downturns, assuming further losses are imminent. So for example, if a tech share or crypto surges up to 100%, investors might expect that growth to continue. So even if the underlying fundamentals don't support that. So to avoid recency bias, it's important to focus on long-term fundamentals, diversify your portfolio, and stick to a disciplined strategy like dollar cost averaging rather than reacting impulsively to short-term market movements.
And always look over the long term. So I know we're going to talk about the 1 year returns because it's fun to be like, oh, what's been happening and to see the excitement of it, but always look longer term if you can and think about what your overall strategy is. There are kind of two trends that popped up in this that I wasn't expecting one of them. It's really interesting.
Yes.
And we're also talking about the ones listed on the Australian Stock Exchange, not the whole world. So there might be ETFs with international companies in them, but we're not talking about like the NASDAQ or anything. This is just the Australian Stock Exchange returns.
So let's start with number 10 on the list, which is CRYP. It is the Beta Share Crypto ETF. And the return on that one is 46%.
This one is interesting because I bought it when it first came out and I am still in the negative. So I went and found the returns since inception. So the return since it's been created, and it's actually negative 11.3%. So even despite the fact it's gone up 46% in a year, it's still negative overall.
Yeah. And it's a fairly recent ETF. So it's only about 4 years old.
Yeah, since 2021.
Yeah. So it might look great this year, but has it been performing well over the long run?
Yes. I think crypto is interesting too because people, I think, maybe assumed that it might have been actually buying crypto, but it's buying companies kind of in the crypto space, not crypto itself.
Yeah.
Number 9, iShares Physical Gold ETF, GLDN. So this ETF kind of tracks the price of gold through physical gold holdings, and it gives you a low-cost way to actually buy gold without needing to go and pick up a gold bar yourself from the mint. And the 2024 return on this one was 50%, which is huge.
Do you hold any gold?
No, not intentionally. Maybe through my super, probably, but no, not actively.
This is a question I get asked all the time. Should I invest in gold? Shouldn't I invest in gold? Gold goes up. Look, it's 50% this year. And one of the things I heard, and I think this was Evan Lucas who said this, but he was saying, would you rather have a lump of gold or like a lump of land? And the difference between those two is like, well, with land, you can create value from it, right? Like there's something that you can get profits from it. You can rent it out. And this is similarly with the idea of like holding companies, right? Like you have a physical asset that you actually can get income from. But with gold, it's like, what's the intrinsic value?
You can't rent it out.
No, yeah.
Yeah, it's interesting. I can't wrap my head around it because I'm like, well, it's a metal. And sure, it has some uses, but mostly we don't like invest in it for its uses. We invest in it because there's this value attached to it. I think some people hold it as like a store of value, as like a defensive asset maybe, but I wouldn't, like it's not going to grow. It's not going to like create an income for you like a rental property or a business. So I'm a bit like, no. But you could buy it as part of an overall portfolio if you're excited by it.
And you're totally right. Like a defensive asset in the sense of bonds and cash, it might be a part of your strategy as well. But it is always interesting when gold comes up in conversation.
Yes. Just because it's doing well now doesn't mean it's doing well always.
Mm-hmm. Number 8 on the list is NUGG, N-U-G-G, which is the VanEck Gold Bullion ETF. So it's interesting that we've seen this trend of gold. So this has returned also around 50%. And this provides, again, an exposure to physical gold bullions, offering a secure and cost-effective way to invest in gold without the need of having a personal storage of gold, which I think you've mentioned your grandma has had. I know my father has had like physical gold in a safe when I was a kid.
Yes.
So this is a way to invest in it.
Yes. I don't think they have it anymore. I don't want to send people to her house, but yes, she has bought it before and taking it home with her. The next one is another gold one. I'm glad all these are pretty consistent with their returns. This is PM Gold, the Perth Mint Gold. So this provides gold, silver, and platinum products and services throughout the world, which is pretty fun. They also have exposure to physical gold. So each unit represents 1/100th of a troy ounce of gold securely stored by the Perth Mint. Troy ounce of gold? I don't know what that means.
A bit of a gold.
Another measurement in gold. Fun.
Yeah, a bunch of gold. Yeah.
And this is also returned 50%. 3 gold ones.
Last time I was in Perth, I went to the Perth Mint, and that was really a fun experience to actually see gold in coins and think about how we actually use money.
Do they pour the gold there? Can you see it?
Yes.
Oh, did you get to see that?
That was really cool. Yeah. I actually went with Joel from the History of Money, and that was such a fun time.
He's such a good tour guide. We used to go on like school excursions because I used to live overseas, like in small mining towns, and we'd be like, oh, we're going to the gold thing today. Gonna go watch the gold pour.
I'd like it as an adult. I'm way more interested in it. As a kid, I'm like, yeah, cool. It was like, you go and do something. But as an adult, it's really interesting to think about the history of money and how we've used it and how we now use it. Like we don't use physical money or gold in the way that we used to, right?
Yeah. And even just like the fact that one bit of metal can be so heavy and like the heat you need to even be able to melt it is crazy as well.
And then they sell the things that they pour it in, the bowls. That you can actually buy those because there's a lot of gold that gets stuck in it. That was really cool.
Interesting.
Yeah, I know. All these little interesting things as a kid I probably wouldn't have cared about, but as an adult I think it's cool.
Yeah.
So number 6 on the list is IZZ, which is the iShare China Large Cap ETF. So this provides exposure to the largest Chinese companies listed on the Hong Kong Stock Exchange, and it offers Australian investors a way to invest in China's economic growth as well.
So that one's actually returned 54% in 2024. Crazy.
So this is when we talk about diversification as well. Sometimes people are interested in different companies, different economies, different countries, and this is a way to invest in China.
Yeah, if you are maybe just buying like an Australian and a US ETF, you don't have like a global one that already has this exposure, then maybe you'd buy it. But yeah, interesting. Number 5, I've seen this one pop up a few times. Interesting that this industry is doing really well on reflection, but yeah, interesting. This one is the VanEck Video Gaming and Esports ETF, so ESPO, and it's returned 56.8% in 2024. This one gives investors exposure to global companies involved in the video game development, esports, and related hardware. Interesting.
Yeah, they make tons of money. I remember having a conversation with a guy who works in this industry in the US, and it's just huge and growing. And just think of how many gamers are getting together and playing, but then also all these conventions that happen. It's huge. It's a huge industry, bigger than like the movie industry.
Crazy. I've seen more like esport competitions advertised where people go to a country to then participate in games. Crazy.
Yeah, it's huge. Number 4 on the list is BetaShare Global Gold Miners Currency Hedged ETF, listed as MNRS, and that's a return of 57%. So in this one, this is a hedged one that offers investors exposure to a diversified portfolio of the world's largest gold mining companies. So with currency fluctuations, it's hedged to the Australian dollar.
Surprise, surprise, another gold mining one.
Oh, so much gold on this list today.
The 5-year return on this one kind of proves our point a little bit about looking longer terms. The 5-year return is 7.68%, and since inception when it was created, 4.87% on average each year. So it's not getting consistent 57% every single year, unfortunately.
And that's why it's so important to kind of look at the longevity of some of these ETFs.
Number 3, another gaming one, the BetaShares Video Games and Esports ETF. So the ticker code for this one is GAME, G-A-M-E. This is returned 60%. This one provides an exposure to more video game and esports companies, including developers, publishers, and hardware providers. It was only created in February 2022, and the total return since inception is only 8.64% per year.
So much, much lower than the 60%.
Yeah, so like all the returns have just pretty much come from this past year.
Yeah. Number 2 on the list, surprise, surprise, is another gold one. This is the VanEck Gold Miners ETF. GDX is the ticker, and it has returned 62.5%. So this has exposure in global diversified portfolios of leading gold mining companies. And the thing to note about this one is the long-term return on it, which is only 8.95% over the last 5 years.
And like that's still great, but not as great when you're comparing it to like 62%.
Yeah. And that's why we're always talking about long-term investing. We often sometimes throw around the number around 7% being average. This is higher than that, which is great, but it's not 62% per year every year. So it's just something to be aware of.
And sometimes 5 years isn't even like long enough to look back. Like you want to look a little bit further if possible. But a lot of these ones were only created quite recently. Like esports is a more recent thing that wasn't back here in the 60s or 70s or 80s.
Exactly. Yep.
So the top performing one of 2024 is the Global X 21 shares Bitcoin ETF. So the ticker code is EBTC. Its 2024 return was 72.4%.
Whoa, that's high.
Yes, crazy. It was created in May 2022, which has been great timing because Bitcoin has obviously gone up in price recently. But crypto is very, very, very volatile, and buying in an ETF just doesn't make it safer, unfortunately. So amazing returns, but not to be expected forever.
And it's completely unsustainable to have 72% returns year on year.
Forever. No, won't happen.
So this is funny because I have a couple friends who invest in crypto, and they'll be like, oh my gosh, my crypto's done so much better than my ETFs. And it's like, yes, of course, because you've only been investing for 6 months or a year.
And it's done really well in the last 6 months.
It has. But will it in 10 years, in 20 years, when you retire in 40 years, will it? We don't know.
It's kind of similar to gold, where it's like it doesn't produce an income in the same way. We just place value on this thing. It's not like a business or a house. So one of those things to be a bit more skeptical about.
Yeah. And often people will say, well, it has no intrinsic value. So we don't actually know what it's actually valued at. It's only valued at what you're willing to buy it at and what you're willing to sell it at.
Yeah, definitely. So in summary, these are the really fun ones that have done well in 2024. Be skeptical. Don't rush out and buy them straight away just because they've done well in the past, but always interesting to reflect on the industries doing really well. And it seems to be gaming, crypto, and gold.
Yeah.
Fun.
Thanks.
Bye.
Bye.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests, or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.